So I want to talk more about withdrawing money from your traditional IRA versus your Roth IRA. And I'll start with a Roth IRA because there's a distinction between your contributions into your Roth IRA and your earnings in a Roth IRA. With a Roth IRA and your contributions, you can pull that money out anytime, tax-free and penalty-free. Now, in order to pull out your earnings tax and penalty free from a Roth IRA, you have to be at least 59 and a half years old, and your Roth IRA account has to be at least 5 years old. Now, with a traditional IRA, there's no distinction between your contributions or your earnings. So in order to pull out money from your traditional IRA penalty free, you need to be at least 59 and a half years old. But when you pull that money out, you still have to pay taxes. Now, if you try to pull your money out of your traditional IRA before you turn 59 and a half years old, you'll have to pay taxes, but you'll also have to pay a 10% penalty. Now, there are certain circumstances where you can avoid the penalty, like if you're a first-time home buyer or if you're paying for higher educational expenses that meet certain requirements. But in general, if you try and pull your money out early before 59 and a half years old in a traditional IRA, you're going to be hit with a 10% penalty. Now, another difference between Roth IRAs and traditional IRAs are income limits. Roth IRAs have income limits for eligibility. So in 2023, for example, if you're singled and your modified adjusted gross income is above $153,000, or if you're married filing jointly with a modified adjusted gross income above $228,000, you cannot contribute directly to a Roth IRA. Now, traditional IRAs don't have income limits for contributions, but they do have limits for deductibility if you or your spouse have access to a workplace retirement plan. Now, I will note that even though there are income limits for contributing directly to a Roth IRA, there is a workaround called the Backdoor Roth. I won't go into the details on this video about that, but if you're interested in learning more, please leave a comment below and we can make a future video explaining the Backdoor Roth in detail. And finally, the other difference between these two types of accounts are required minimum distributions, RMDs. Traditional IRAs have RMDs, meaning that once you hit 73 or 75 years old, depending on the year that you're born, you are required to begin pulling money from your traditional IRA, even if you don't need the money. Now, Roth IRAs do not have RMDs, meaning if you don't want to have to touch your money, you want it to continue to grow, you can do that with a Roth IRA.